given those opening gains, just trading about 0.5% higher at this point, above that 24,800 level, of course. And, of course, the flavor of the market today is with the autos and FMCGs.
Right. Yes. Good morning to everyone. You're joining from the SBI studio. And yes, it is a day where a big day coming in for GST reforms. In fact, it was long due and it has come through not today. But all of this was already priced in, Kanishka. And therefore, we are seeing the cool off coming in the markets. We did touch those 24,900 levels, but we have cooled off from there on the Nifty. We are down at 100 odd points from the day's high. We're trading with gains of 0.4% or 0.5% coming in on Nifty right there. Nifty Bank has also cooled off from the day's highs, but nonetheless trading with gains of 0.3% on Nifty Bank as well. The broader markets also have moderated a bit. And if you look at the mid-cap space, mid-caps are trading with gains of just 0.02%. It's very, very flat as of now. It has turned very flat. Small caps have also turned very flat. In fact, as you see on your screen, it's just it's 0.01%, very, very flat moves coming in on Nifty small cap as well after the gap up start in the morning. So all of this is already priced in, and therefore we are seeing a bit of a moderation coming in as far as the markets are concerned. Now, sectorally, Nifty Auto is in the fast lane, of course, in the back of the GST cut, even though we do have a 40% on expensive cars or the sin goods, but Nifty Auto is in the fast lane. M&M, Eicher Motors, TVS Motors, Hero Motor, all of these are trading with gains of 1.5+%. The FMCG pack, of course, the other sector that's going to be in focus, which is a big beneficiary of the GST cut. Imami, Britannia, Colgate-Palmolive, Dabur, Nestle, ITC, all of them are trading with gains of 1.5 odd%. So Nifty FMCG is also doing very well. On the losing side, though, we have Nifty IT that is trading with cuts of more than 0.5%. The PSU banking names and the pharma pack has also moderated and is trading with cuts of 0.2%. So that's how the market is really looking like right now. And if you look at the advance decline ratio, also, in the morning we did see more advances. Now breadth is getting more even right now. India VIX is up 0.9%. Remember, today is also the Sensex expiry. We had moved the Sensex expiry to Thursday, like the Nifty expiry had moved to Tuesday. So we do have the Sensex expiry, and therefore there is a bit of volatility that we might witness in today's trading session as well. But of course, the top gainers are from the auto pack, and M&M is the top Nifty gainer. We also have the consumption names like Trent, Eicher, Grasim, all of these, ITC, all of them doing well in trade today. So that's how the market is largely shaping up. But let's get started with the show. This is how the market is shaping up, and we'll get started with the show. This is a show where we get all the stock-specific questions answered. You can write into us. The number is flashing on your screen. We also have Bikaji Foods, which is a major beneficiary of the GST reforms. That is trading with gains of 1.5+%, but it was trading much higher, as cooled off like the rest of the market from the day's high. But we also have the management of Bikaji Foods, which will join us before we get started with the show. We have Rishabh Jain, CFO, Bikaji Food International Limited, who's now joining in. Hi, Rishabh. Good morning. Thank you so much for joining us today. Rishabh,
Thank you.
Right. Rishabh, it's a big reform coming in, and, with this GST rate cut coming through, almost 90% of your portfolio is likely to come under the 5% GST slab. Tell us, how does this boost the consumption in the mid and the lower end categories, and also what is going to be the incremental volume upside for your business?
So thank you. So it's a big structural change. It will help in two ways, basically. One, of course, we see that there are a lot of unorganized sector in our category, which will become more organized and ultimately more consumption increase overall. So we see that it will be good consumption boost for the rest of the year, and we are very optimistic about this. And number two, volume growth. So this year we'll see two half basically. First half we grown at volume growth of 8 to 9%. Other half, the rest half, we see that at least 3 to 4% of volume growth will be there, because we'll pass on some grammage in the pack, like in impulse pack, which is price point pack, 5 rupee, 10 rupee. So we'll pass on extra grammage to consumers, and in bigger pack, which is family pack for us, we'll do some MRP reduction and everything. So it's all discussion going on, but yeah, it will be good boost for consumers.
Rishabh, this is Kanishka also joining. So let's see how that change comes into effect with the pricing and grammar changes that you're looking to make. But speaking of the markets that you cater to, do you think this lower tax rate will meaningfully expand your rural and semi-urban customer base where affordability is the key?
So we see, so largely unorganized sector will become more organized, and we see overall good boost in overall consumption across deep rural. What we see, because ultimately MRP will get reduced. Where suppose if we currently are at 100 rupee MRP, most of the industry will reduce MRP to 90 to 93. So that's what will help in overall consumption across each deep rural.
Rishabh, also, while this comes into effect from the 22nd of September, what happens to the inventory on shelves, the supply chain, also the dealers? Is there a framework in place for a smoother transition?
So it's too early, like yesterday night only, like all the but yeah, we are working on the same. And normally in our category, the stock normally distributor keeps 1 to 2 week of stock. That's it. They don't keep any major stock, so we don't have any major transition issue as of now, unless other category, consumer
Okay.
durable or for us very low. We keep very low inventory in complete trade.
Okay, so that's about the inventory management. But speaking of demand and what do you expect going forward? This relief has, of course, come as a benefit at a very crucial time. So tell us, how do you think the general we anyway see a lot of FMCG demand during the festive season. So that clubbed with the GST reset that we have seen, what kind of demand are you expecting?
So last 2 3 quarters for us has been good. So we are seeing quarter improvement, and this year Diwali has been looking very good, and we are already looking good. And this is a bonanza for us. So extra incremental growth will be there. Of course, the transition of 3 weeks will be there, which will have some impact. We'll see, but overall we see good boost in overall demand during Diwali season.
Right. Also, Rishabh, talk to us about the fact that consumer staples have been at the receiving end or have been reeling under pressure. Do you see a re-rating coming in as far as the staple end of the market is concerned?
Of course, we see that there will be some, of course, volume growth will be there, margin improvement will be there, so some rating should be there in consumer sector.
All right. So, apart from that, Rishabh, beyond the tax benefits that we are seeing, what role will exports and the new product categories that you have, they will play in sustaining double-digit growth that you're aiming for, going forward?
So it's a regular part of our business. We target 2 to 4% of NPD sale every year, and that's on our target card every year. So it's a regular exercise for us, and we see good numbers coming on for next year also.
All right. Also, do tell us what are the categories that are driving growth for you, and going ahead, also what are the key markets for Bikaji, and also during the festive period, what is the spurt that you're likely to witness?
So basically for us, we are in Diwali season, and sweets the big role to play. And sweets is already at 5%, and it's not changed. So for us, transition will be much easier because sweet is 5, and there's no change in sweets category. So, but yeah, the sweets will be a big role to play in our overall growth in this Diwali season. And overall, what we see that from volume growth perspective, we see overall good numbers coming here.
Right. So that's about the specific categories. But, Rishabh, talking about market share, this is not something that has come just for Bikaji. It's, going to happen across the sector. All of the FMCG players are going to benefit from this GST reset. So how do you stand to, what are you going to do? What's going to be your strategy to maintain your market share there?
So basically, we are at this category is growing at 8 to 9%, and we are growing at 12 13%. So anyhow, we are gaining market share in last 2 3 years, and that's target for next 2 3 years also. Our major target is to grow our focus market like Rajasthan, Assam, and Bihar, our core market where we are in leadership position. And we have 6 focus market where we are investing, be it in plants, be it in people, and be it in trade. So the major focus is to drive focus market, new markets where growing disproportionately. And overall, we want our value growth should be between 14 to 16%. That's a overall target for next 2 3 years. And currently, we are close to 40 49% utilization. So depend upon we invested a much higher. So next 2 3 years, there will be less on investment in capex and more investment distribution. That's where we'll drive growth.
All right, Rishabh, thank you so much for taking the time out and joining us and taking us through the impact of the GST rationalization on Bikaji Foods. On that note, it's time.
SVP Research, Religare Broking. Hi, both of you. Very good morning. Thank you so much for joining us. We'll start with all the queries then. And remember, from today, we'll be taking live queries with our viewers. You can join us on the live on the show and have your queries answered by our experts. So let's get started then. The first caller we have is Chandrasekharan, who's writing in from Chennai. He has a query on Tanla. Ajit, let's take this query with you. It's a query on the current price and where it is headed from here. We are now joined by Chandrasekharan. Hi, very good morning. Please tell us what your query is and welcome to the show.
Hi, good morning. Chandrasekhar. I'm holding Tanla platform 100 shares with average price of 1,220 rupees. I consider this for long-term purpose, and as of now, it's on loss, 40% loss. I would like to know the fundamental is good or no, and can I hold it for another 1 year, considering the price, the present price? Should I average at the current price or exit and consider different shares altogether?
All right, Shamila, why don't you take this one? How are the fundamentals looking for Tanla platforms?
Honestly, I do understand his pain because it seems to have halved from the price that he has bought at. But if you look at the valuation that it's at as well as their numbers, they seem pretty decent. I think another factor in favor of Tanla is that I think in 2025 they've done a share buyback at 875, which is also again higher than the price that they are at currently. So all I can say is that it's not a very easy spot to be in because your price erosion is so great and the outlook for the sector again is not very good. Given everything that is happening in the US and the whole, in any case, the sector was going through pain of its own even before this whole tariff situation, etc., started. So I think that if you do stay invested at this price, then I think the sort of target that you could be looking at could be 780, 800 for to start with. That is still much further away from the buying price that you bought at. But I just think that this possibly could be the wrong price to sell at. So my advice would be to hold on for a bit, and then when the stock pulls back to about 800 levels, then relook at it, and then sort of take a call whether you want to stay invested in this stock or move to something else.
All right. I hope, Chandrasekharan, you have got your question answered. Thank you so much for joining us and asking your question. Let's move on to the next question. Before we patch the next caller, let's take a question that's come in as a message. This is by Dr. Zeenat Kausar, who's writing in from Ranchi, Jharkhand. She says she has 1,200 shares of NBCC at a buying price of 103 rupees. What should she do with the same? Should she invest? Also, she wants to know if she can invest in Castrol India. Please guide. Let me come to you for this, Sharmila. I think she's not written a time horizon, but I believe it's for a period of at least 1 to 2 odd years. NBCC at 103. What should she do with it? And Castrol India, is it the right time to enter?
So let's come to NBCC first. Overall, I think that the valuations of this stock look fairly reasonable. Outlook is also fairly good. I think that you can definitely stay invested in this, and you could be looking at targets of closer to 120. Coming to Castrol, also let me just add for NBCC, this is overall a sector that does better in the second half of the year as spending increases, etc. So the next 2 quarters could be better for the stock than the first half of the year has been. So NBCC for me remains a hold. Coming to Castrol, that's a lubricant space, and in a sense, it's a niche stock. It's a very good quality mid-cap play. So I think that, again, at this price, it looks fairly reasonable to me. So you should continue to hold. I wouldn't buy the stock, but if I had it, I would hold it.
Hold call for Castrol India, but Ajit, let me come to you now. This query is coming from Shankar, who's writing in from Chennai. He wants to buy RVNL. He's asking, could you suggest an entry price for the stock? Do you think current levels are good to enter this stock, and what kind of movement are you expecting, say, over the next 6 months for this one?
Yeah, good morning. So we are seeing a bit of a recovery or a rebound in most of these railway names, but it's too early to say that the bottom has made and we are set for the reversal. So we are just seeing a rebound. So short term during this recovery, maybe close to around 355, 360 something that the stock might test. But let's say if the view is very short.
All right. Moving on then from RVNL to next caller who's now joining us, Sudhin Kumar from Ranchi is now joining us on the phone line. Hi Sudhin, thank you so much for joining us. Fire away a question, shoot.
Okay, I want to know about the NBCC and LIC Housing Finance. I purchased NBCC at the rate of 108, 2,000 shares, and LIC Housing Finance 221 shares at the rate of 668 per share. What is your view?
Right.
We should keep in about what is the outlook of these two shares.
Sharmila, you want to take that question?
I think NBCC have already answered. For me, that's a hold. Coming to LIC Housing Finance, once again, this is from a sector that I like. I do like real estate as a sector. Also, I think that the growth for real estate sectors will come from not from the the tier 1 cities, but from the tier 2, tier 3 cities where the loan ticket size is smaller. And LIC Housing Finance is nicely present in these towns and cities. So valuations also look reasonable. So for me, that stock again is a hold.
All right, so whole call coming for LIC Housing as well. But let's get to the next query then. This is Vaishnavi writing in from Chennai again. She's bought Amber Enterprises about a year back. She has 10 shares at a price of 2,390 rupees is the price that she's bought Amber Enterprises at. And what's the duration time and what's the target that she should look at? How long should she continue to hold this one? Ajit, let me come to you for this one.
So Amber, we are seeing a very consistent uptrend. Means during this phase of around 21-22 period, it was a marginal top. But post this marginal dip, it has been gradually inching higher, and she has bought it at very reasonable levels. The stock still offers the overall potential to inch toward maybe the 5-digit mark. So she can continue to stay put. At the same time, now since we are seeing consolidation, a possible breakout above 8,000 is something that she might in fact consider adding more in case if the view is long term. So with the 7,000 as a stop loss, she can definitely hold and looking for to add more once it crosses 8,000 levels.
All right, so that's the word coming in on Amber Enterprise. But let's move on to the next question. This is coming from Manisha Kala, who's writing in from Mumbai. She says, I really like your show and I'd never miss out even one episode. Thank you so much, Manisha. Next time you should call in and ask your question. But for now, we'll take your question. And she's saying both the analysts are amazing. So both Sharmila and Ajit. She says she wants to invest in pharma and the cement industry with more than 2 years horizon. Suggests 3 good stocks for each sector. So pharma and cement industry. Sharmila, big boost coming in for the cement pack, and there could be perhaps a re-rating because we are done with the monsoons and now the demand can pick up, and with the GST rate rationalization, the growth in the real estate sector, cement pack looks good for now, right?
Cement pack, in fact, always looks good because this is sort of directly proportional to how your GDP is moving. So to my mind, for a country like us, cement is always going to be a sector that is going to be in focus. My trouble is that she wants 3 stocks. I have actually 2 stocks that I like in the cement. I like Ultratech Cement and I like Ambuja Cement. But if you push me for a 3rd stock, then it could be JK Cement. But yes, these could be the 3 cement stocks that she could consider.
So that's the view on the pharma and the cement space. But moving on to the next query, then we have our next caller who's joining us now. This is Radhakrishnan from Chennai. Hi, Radhakrishnan. Very good morning. Please shoot away your query.
Actually, I'm making loss in IRDA, IRDA 32%, IRCTC 20%, making loss. Can I hold for one more year to make profit?
Right. Sharmila, what do you think? Are these stocks good to hold for a period of another year?
Yes, I think so. I think IREDA valuations look reasonable. IRCTC, in fact, is a stock that I like. So that is again a definite hold.
All right. I hope you have got your question answered. Thank you so much for joining us on the phone line. But let's move on to the next question that is coming in from Subramaniam from Sikandrabad. He says he has Coforge at a buying price of 1,870 rupees, 160 shares. He wants to know if he should hold it or should he be selling it at the current levels. Let me come to you, Ajit. Coforge, now this one's a mid-cap IT name that has been a clear outperformer. Do you see more outperformance coming in? And if yes, should he be holding on to it? Or at this current levels, actually, he is actually sitting at a loss right now. So what should he do with Coforge?
So yes, we can see the outperformance within the select mid-cap IT names, and Coforge is leading from the front. But at the same time now, since the IT as a pack is still reeling under pressure, means we were not seeing any kind of meaningful recovery. And of late, yes, there were attempts of rebound, but it couldn't sustain. So Coforge also is witnessing a bit of consolidation. So if the view is short term, probably around 1650, 1600 is something which may act as a base. So with that as a stop loss, he can stay put. But for any fresh momentum, we need a decisive, break above 1800 mark. Then only we can see the stock can inch towards the record highs, or maybe make a new high. So as of now, it's a hold, but for fresh momentum, we need a close above 1800.
For fresh momentum, we need a close above 1800. So resuming all the queries then, now this one is coming from Ramanan. He's bought 360 shares of ONGC at a price of 323 rupees and 112 shares of LIC Housing Finance at a price of 757 rupees. Obviously, he's currently facing a loss in both of these purchases. He wants to, wants our expert advice on what should he be doing with these two, ONGC and LIC Housing Finance. Ajit, you want to take this one? How are the charts looking like? When do you think it would be a good time for some upside from the levels that Ramanan has bought these shares at?
So yes, if you see, ONGC has been almost 8-9 months that been trading in a very tight range. Currently, it's hovering around the major averages. Though it made an attempt of recovery in past also, means to cross and sustain above the major averages, but it couldn't hold. So as of now, near-term outlook looks sideways to me until we again decisively reclaim 245 and inch toward 255. So broadly, this range, 10 points range, is something that might continue to cap the upside. So if his view is short-term, I would recommend him to exit this stock because this consolidation might continue in ONGC. And if, let's say, the view is for at least 3 to 6 months, then definitely he can stay put. Because the downside also seems capped because 225, 220 is acting as a strong base. So broadly, it's a consolidation, and a decisive close above 250 would trigger the next leg of the up move. LIC, on the other hand, has been underperforming, within this space. It's gradually drifting lower. Of late, in fact, it has formed a fresh shorting pivot. So possibility of further drag towards 510, 500 levels, it seems high. So for LIC housing, it's prudent to exit.
All right, so moving on to the next question, and this is coming from Pramod from Thrissur, Kerala. He says, it's Onam tomorrow. Wishing all the viewers a very happy Onam. Wishing you also a very happy Onam. Pramod, thank you so much for writing in. He says he wants your view on Lemon Tree Hotels at a buying price of 121. He's bought 1,000 shares, and Avalon Tech at a buying price of 490. He wants to hold it for the next 3 years. What's your view on both the stocks? Sharmila, Lemon Tree and Avalon Tech, good hold for the next 2 to 3 years?
Lemon Tree, definitely. I think, the kind of hotels that they've added, as well as the price point they're at, as well as my outlook for tourism as a sector, and the valuation that the stock is at, makes this a very attractive stock for me at this price. So that's a definite hold. Coming to Avalon Tech, again, I think valuations seem reasonable. But perhaps, I'm more positive on Lemon Tree than I'm on Avalon Tech. I think you can get a higher price than the current price, but I'm sort of neutral on Avalon Tech.
All right, so that's the view there. But moving on to the next question. Now, the viewer hasn't written their name, requesting all our viewers to please send their queries alongside their name so that we can attribute these queries to you. So this one is on ITC. This viewer has 250 shares of ITC at a price of 457 rupees. He wants to know whether he should average at the current levels or should he spend this additional money in ITC hotels instead of averaging ITC. So ITC and ITC hotels, Sharmila, how are the fundamentals looking?
So, honestly, I like ITC as a stock, but it's a bit of a dilemma given the fact that it is considered, sin sector and it will always be taxed. So if it is new money that you're investing in, I think look at something else. I hold ITC shares. They've given me very good return. I'm not looking to sell them. But in terms of fresh investment, because, this is always a concern. Every time there is a budget, every time, now we've had a big event today where we've seen GST rates get rationalized, but, cigarettes won't fall into that bag. But so, that's something that you need to always keep in mind when you invest into ITC. But that said, I think ITC Hotel seems like a good idea. So maybe put your additional, the fresh money that you have in ITC Hotels.
All right, so that's the view on ITC and ITC Hotels. But moving on from there, Sandeep from Noida is writing in. He says he has 750 shares of IEX at a buying price of 203. He wants to know your view. Ajit, let me come to you for IEX. What would be your view for the next, say, 6 months to 1 year on IEX?
So, see, after this sharp decline, we are seeing a bit of a consolidation or a pause, but the stock is still holding below its short-term averages. So this indicates that bears are still under control. Means for any decisive recovery, we need a close above 150. Otherwise, the sideways tone might continue. And the stock might again experience a downtrend or a negative move in days to come if it fails to hold this level. So as of now, since if the view is short-term, you can exit the stock and switch to the sectors or themes which are holding strong. So like auto, FMCG, consumer durables, select metal counters where you can consider relocating as well.
So that's the short-term view. You could look at exiting IEX and enter into some of the consumption or auto names at this juncture. But on that note, we'll take a very short break. Be right back with more of your queries to be answered on the other side.
Studio on a show, Buy Now Sell Now, where we're getting all your stock-specific questions answered. The number is flashing on your screens. Keep writing into us, and remember, we have also started taking live questions. So if you're interested, please do write into us on the number that's flashing on top of your screen, and we'll take you as a live caller from tomorrow. But let's get started with all the questions that have been trickling in yet again. This is Mohan, who's writing in from Odisha. He says that he holds 5 shares of Dixon Tech at a buying price of 18,700. For the last 40 days, he's been holding it. He's a senior citizen. And he wants to know what should he be doing with Dixon Tech. Sharmila, Dixon Tech, he's a senior citizen, so clearly he'll be holding it for a longer period of time. What do you see in the fundamentals for Dixon Tech? And Dixon Tech is one of the shares that has done very well for itself. Do you think the valuations now are a bit stretched, or do you think there is more upside to it?
I just think that, given the fact that he already holds the share and the valuations look reasonable, and I think that the development that we've seen today could have positive impact for stocks like a Dixon Tech and the space that they're in. So I think for me, at this point in time, the stock would be a hold. I don't think I would buy at this price, very honestly, a fresh buy. But if I had it, I would continue to hold it.
All right, so that's the view on Dixon Tech. But moving on to the next query then, this one is coming from Ramya, who's again written in from Chennai. Okay, so this one is on ITC. We've already taken ITC. So let's get to the next query then. This is Narayan, writing from Bangalore again. So he wants to know if it's a good time to invest in railway stocks as of now. If yes, can you suggest 3 picks? We already discussed railway stocks with Sharmila. Ajit, let me come to you. Any railway-related counters on your list for the short term?
The short term, VNL, Railtel is some of the stocks wherein we were seeing traction. But again, since the reversal is not confirmed, one needs to be slightly selective. IRCTC also one can add to that list, but do maintain a strict stop loss, let's say 2-3% down from the current area for all these top names. And in case if it rebound, let's say 6 to 7%, you should definitely book profits.
All right, so that's the word coming in on the railway stocks. Let's move on to the next question. This is Manoj writing in from Mumbai. He says he has 200 shares of Indus Tower at 360 rupees. What's your view? Sharmila, Indus Towers for the next 1 year, what would be your view?
I think continue to hold the way things have changed, and hopefully there will be more clarity even for Vodafone going ahead. So I think all things considered, their overseas business, what they're doing now, there is more clarity now. So I think continue to hold the stock.
But that's all the time that we have for all the queries today. On that note, we'll let you go. Sharmila and Ajit, thank you so much for joining us. But let's move on and get you some more updates on the GST front. Now, it's a mixed bag for the auto sector. Small cars, motorcycles under 350cc and all auto parts, they now fall in the 18% category. But bigger cars, they'll attract steep 40% GST rate. Srishti is here to tell us how this could steer the demand in the automobile industry going forward.
Well, yes, we are catching you live from the SBI Live studios. And yes, of course, it's a great news coming in for the Auto Pack right now. Whole host of announcements from the GST Council have been made. And firstly, let's take you through the announcements and then we'll also tell you the company-wise impact. So firstly, on the car segment, we have seen the 1200cc cars and below. They were the key beneficiaries there because the tax rate plus cess earlier was around 29 to 31%, which has now come down to 18%. But on the flip side, the cars of petrol engine, which are above 1200cc, and for diesel 1500cc and above, they are going to be taxed at 40%. But all in all, it is expected to be a big relief there as well, because with respect to the cess earlier, you can see on your screen that the total tax was around 45 to 50 odd %. Now let's talk about the two-wheeler space, because there the excitement is 350cc is the benchmark. If you are below that category, then you will be taxed lower at 18% versus 28% earlier. And now if you are above 350cc category, then of course you will have to bear the brunt of higher tax. Three-wheelers, they will be the beneficiary with 18% tax, and EVs as well. There was some bit of an uncertainty whether or not the 5% tax will go higher or not for some of the high-end cars, and that's it. It's 5% that has been maintained, and even tractor segment also received that bonanza from 12 to 5%. Now let's talk about the company-specific impact. So firstly, from the passenger vehicle segment, the key beneficiaries Maruti Suzuki and Tata Motors, they derive more than 70% of revenue from the small car segment. But on the other side, the hybrids are going to be taxed at 40% right now, because there were some hopes that that too will come lower, but that did not pan out. So Maruti Suzuki, some positive, some negative as well. Tata Motors, yes, of course, key beneficiary in the commercial vehicle side as well. When it comes to Mahindra and Mahindra, I believe that for all the segments out there, they have been the key beneficiary, from tractors to commercial vehicle to their portfolio in the passenger vehicle size, which is around 44% of the overall volumes. And even the two-wheelers, majority of the companies will be beneficiary, barring Eicher Motors, which drive just 9% revenue from 350cc and above. So all in all, whole host of announcements for the auto sector, and yes, it is a big bonanza for this space as well.
All right, a big bonanza indeed just before Diwali. But with that, it's a wrap on this edition of Buy Na Sell. Now, we'll see you tomorrow with all your stock-specific questions answered on this show. Kanishka and I will take you leave. Thank you so much for tuning in.